SPVs are often mentioned in the Dubai financial world, but many people still don't understand what they actually do or why they matter. If you're building wealth, protecting assets, or thinking about succession, a special purpose vehicle could be a smart part of your wealth planning strategy. In this video, we'll walk through the 5 real-world examples of people using SPVs in Dubai. From holding company shares in real estate to inheritance planning, banking access, as well as asset protection. With this video, you will have a clear understanding of when and how an SPV might fit your own setup. Before we start, my name is Shiraz Baid and I'm the founder at Lepidus Wealth, where we help clients and families protect their assets using a range of tools including trust, foundations, wills, and offshore structures. So if you own a business or real estate, don't wait until a legal or health crisis to start thinking about protecting what you have built. Instead, request your free and customized asset protection plan by clicking the link below. You can then implement it step by step as your journey progresses. Let's start with one of the most common use cases, that is, holding shares in an operational business. If you are running a company in Dubai or abroad, there is often a risk that comes with being the direct shareholder, whether it's legal exposure, succession risk, or simply privacy concerns. Placing those shares inside a DIFC or ADGM SPV adds a layer of separation. This separation protects you personally from liabilities attached to the operating business. But more than that, it creates optionality. You can more easily transfer ownership, appoint a corporate director, or even structure smooth inheritance plan without disrupting the day-to-day operations. For example, a tech founder with a startup in Dubai might use DIFC SPV to hold 100% of their shares. That way, if they ever raise capital or restructure equity, they are not the one personally holding the shares and the transition is clean. Investors also prefer dealing with a clean, well structured entity rather than a patchwork of individual ownership. Now, let's look at the second use case, that is real estate holding. This is especially relevant for international families investing in Dubai property. Instead of buying assets in your personal name, which can trigger probate issues, you can use an SPV to hold the property itself. This is not just about privacy, it's about a clean succession plan. If the SPV is structured properly, your beneficiaries can step in without court delays, inheritance battles, or asset freeze. One expert client, for example, holds 2 Dubai villas through a DIFC SPV combined with a foundation. His children are named as the beneficiaries. In the event of his death, the structure ensures the property passes seamlessly without going through the Sharia succession or the UAE court processes. He also benefits from a streamlined tax position in his home country thanks to proper disclosure and treaty alignment. The third case is asset segregation with larger structure. Say you've got multiple business interests or investments, and you want to silo each one for risk and reporting reasons. You can create multiple SPVs under one foundation, each with distinct purpose. One might hold shares in a UAE company, another could hold an investment portfolio, a third might own a piece of real estate. Keeping them separate reduce cross-contamination of risk. It also helps when it comes to banking because each SPV can open its own account, making it easier to isolate transactions and provide clean audit trail. This is especially useful for family offices managing diverse holding. We often see this with clients who operate in regulated industries or maintain both personal and institutional assets, where regulatory clarity and internal controls are crucial. Now, let's talk about inheritance planning across borders. High net worth individuals often have their beneficiaries in multiple countries and want to ensure the transition is smooth, tax efficient, and free from disputes. A Dubai SPV can act as the holding layer for international assets, especially when combined with a foundation or a will. It avoids forced heirship rules in many cases and simplifies the process for beneficiaries. For instance, a European businessman might hold shares in offshore companies, bank accounts, and even intellectual property with Dubai SPV. That single entity can then be passed in one move. reducing fragmentation and avoiding legal hurdles in each jurisdiction. He may also benefit from simplified valuation and documentation, particularly when dealing with jurisdictions that impose estate taxes or require notarized transfer of each individual asset. The fifth use case is bank account continuity and access control. This is something many people overlook. Let's say you have sensitive banking relationships and you want to ensure those accounts remain accessible even if something happens to you. An SPV allows you to appoint directors, signatories, or successors who can step in without triggering account freeze. Compare that to a personal account where banks will often freeze assets upon death. By housing your assets inside an SPV, you maintain operational continuity. For example, we have worked with an expat entrepreneur who held significant funds in a Swiss bank. He moved those funds under the DIFC SPV, then appointed his co-trustee and a daughter as authorized signatories. If anything were to happen to the client, there would be no disruption and no need for court intervention. He also gained the ability to manage those accounts under a single governance structure, reducing the administrative friction. Of course, these five examples are not the only ones, but they represent the most strategic and high impact cases where we see regularly SPV being used, especially for international families, entrepreneurs, and investors who value control, continuity, and clean succession. As global wealth becomes more mobile and families are more complex, these structures are becoming less optional and more foundational. As I mentioned earlier, if you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.